3, 2, 1, 0. Ignition. Liftoff.
Hello, everyone. I hope you guys are doing well. My name is Nick.
And I'm Yuri. Thanks for joining us again. You're watching Moontower HQ.
This week, we explore the future of digital commerce and how Bitcoin fits into the picture. Just recently, Jack Dorsey, the founder of Square, has voiced his opinion about Bitcoin being one of, if not the strongest contender for an internet-native currency. Let's analyze this statement. I guess to start, defining a native currency to the internet would probably be a wise choice. When the internet was built, there were certain protocols that were established similar to TCP/IP with regards to the communication rails that are integrated within the framework of what it is, the internet. In a similar fashion, what an internet native currency would be is a similar protocol, in this particular case, Bitcoin, that comes already within the network infrastructure for people to use in terms of payments and transferring value from one area of the internet to the other. With a native asset, as well as with a native protocol such as TCP/IP, there are, of course, certain restrictions and there are certain advantages, some of which we'll get into some time later. However, for the time being, Yuri, do you think Bitcoin is really suited to become the next native currency as it is right now?
Well, I think as it is right now, we definitely have some problems with Bitcoin as it operates on the main chain on the protocol level. But it's still a peer-to-peer currency, and we can still operate with it as it is. You can integrate it with API to the actual reference implementation Bitcoin Core, and you can integrate with all kinds of services. However, we all know that as the price and value of Bitcoin goes up, the transaction fees will also go up in dollar terms. It doesn't mean they will go up in Bitcoin terms, because transaction fees are paid to miners in Bitcoins, not in dollars, obviously. But because the value of one Bitcoin unit against the dollar goes up in value, so obviously the transaction fees in dollar value also go up, and they can become as high as 10, 20, 50, or even $100. If Bitcoin really becomes the global reserve currency of the world and is worth, $1 million per piece, then the transaction fees can really be high in the I guess three, maybe even 4 digits, which means that Bitcoin will be used on-chain mostly for settlements, such as very large transactions between buyers and sellers, so like for a house or a car, or for settlements between institutions. So, but of course, progress doesn't stand still, and there is a lot of work going on the second layer technologies, so-called the layer 2 technologies of Bitcoin. And the most promising one that is already operational and it's in production, although still quite early and green, is the Lightning Network. As a matter of fact, the Lightning Labs which is one of the companies that is developing Lightning Network technologies, have delivered and shipped what's called LSAT, which is a Lightning native API protocol that is perfectly suited for native internet payments. So what it allows you to do is to charge Satoshis, which are the smallest units of account in Bitcoin, for any API calls on the internet in a very, very easy and straightforward and seamless way. Integration takes literally a few lines of code, and you're able to charge in different manners. For example, right now, the way that internet APIs work in different SaaS models, service as a business, software as a business models, is that you actually have to subscribe to the service a lot of the times, because the current legacy infrastructure doesn't really support small payments, right? So they have to just literally take $10 per month or $20 per month from you, just as a subscription model for using the API. And with those subscriptions, they give you a certain amount of API calls that you can do. For example, I want to call an API for a weather forecast, 20 times per day because my app requires that information, right? So they would tell me, okay, this costs $5 per month, and that's all I have. But with the Lightning, because you are able to pay in extremely small amounts, literally in dollar terms, less than 1 cent, then you're able to charge. In what's called a pay-per-call. So you're able to charge for every single call. So if you are using only 20 API calls per day, which cost much less than a cent, for example, then you will pay less than $10 definitely per month. Your bill may be $1-2, and those who use the API heavily obviously will pay more money. So this is why micropayments are very important to the internet and the payments on the internet. And I think that Bitcoin suits it well, but it suits it well in terms of its layer 2 technologies rather than the protocol on the main chain.
Yeah, you know what? I very much agree. And to further the point with regards to microtransactions, I believe that that's actually one of the biggest building blocks that Bitcoin plus layer 2 technologies has when it comes to the future of payments, as well as also autonomous organizations. So when it comes to an autonomous organization, basically what this is code that is operating in a capacity very similar to that of a corporation. Currently, there are limitations with what can be done from a financial standpoint, automatically bank to bank and things of that nature, because those solutions don't scale well across multiple platforms. They're very specific to an institution, they're very specific to a use case. However, one can envision things like, for example, micropayments opening up the ability to have, for example, autonomous hosting services, where the entirety of the actual corporation is run and coded in such a way that as soon as there's server space that needs to be increased, what it will do, it will contact a supplier. With that supplier, it will be able to actually initiate a transaction with them, again, via a micropayment to from the Lightning Network, and then be able to get those resources, have those resources shipped autonomously again to the warehouse, have it set up, and as well as other programmable HR functions as well, and a lot of interesting things that could actually start to proliferate within this microtransaction environment that is essentially governed on one protocol that is synonymous between all of the participants within the internet. Also here, you start to tread into the topic of IoT, in my opinion, or the Internet of Things, as in order to fulfill this full, truly autonomous vision of, for example, a corporation ordering its own server space or server racks, having them be delivered, installed, and fully operational, you need a way to track things in movement, not only just to be able to pay for them, but also to be able to have them ping back in an intelligible way. Well, this is where Internet of Things comes into my opinion, where you have each one of those particular pieces, each one of those packages, each one of the perhaps even autonomous robots that is actually setting up the server rack itself, be able to communicate with the entirety of the network itself. And of course, in order to denote a salary, if you will, to these robots, they come in the form of electricity, but that billable electricity time will again be rewarded with a micropayment. So now you have very interesting business structures that could be built where an organization is running more or less autonomously and paying its own autonomous subsidiaries or constituents, again, machines, HR, labor, if you will, not necessarily human labor in this case, autonomous labor, but still labor. And there could be very interesting ways to organize it such that other companies come in and start just providing autonomous labor. For example, an autonomous robot company or a company that has built and scaled lots of industrial autonomous systems could come in and provide this type of infrastructure for autonomous organizations looking for this type of HR capabilities. Again, HR is an antiquated word in this particular regard, but the resources for actually being able to move physical objects in space rather than in a digital environment. So there's definitely a lot of implications for Bitcoin as a native currency, plus Lightning to be able to do this, which is, again, the network for micropayments. One of the other aspects that I believe also something like this would help proliferate is getting most of the people that are unbanked onto the ecosystem. Right now, there are a lot of limitations with Bitcoin as it is in terms of who can actually access the payments network. Granted, to utilize it, yes, you only need an internet connection and a phone, but to actually get the Bitcoin itself, you have, as we discussed in previous episodes, a certain amount of choices that are KYC, which is know your client, where you give information to the corporations that are operating this, and non-KYC, which is essentially buying from your friends and other methodologies as well. The latter component pales in comparison in terms of the volume of the former. So a lot of the individuals who are currently buying and participating in Bitcoin do have to have a verified identity and therefore do need to have documentation. A lot of people in this world, in South Africa, for example, in other areas of Africa and other areas of Asia, they do not even have an identifier or identifying document, so to speak. India being one of those places too, to a certain extent. How do these people get Bitcoin? How do these people get into the internet as it stands with Bitcoin as a native currency protocol? Personally, I'm not sure. So what are your thoughts in terms of the implications of an internet native currency where there's no KYC on the unbanked?
Yeah, I mean, I don't think it's a very difficult problem to solve because if you cannot buy Bitcoin, you cannot invest in it from the point of view of, as we see it in the first world, let's say, where you actually invest your salary, your cash into Bitcoin, and now you have Bitcoin. Then the solution is very simple. You actually work for it, or you barter for it. You sell things for it, right? So when there's no one around selling Bitcoin to you, which I think is improbable, because if you look at it this way, the society in India and in many African countries is very heavily cash based. So there's lots of cash going around, and people don't really need any KYC or a bank account to actually buy Bitcoin. As long as they have a cheap smartphone, Android or whatever it is, that supports any Bitcoin wallet whatsoever, they can get their hands on Bitcoin just by exchanging cash for it. But even if cash is not available, they can work for Bitcoin if there are people who are willing to pay Bitcoin for their work. So they can perform all kinds of services. They can sell their goods. Let's say farmers can farm vegetables or cattle, and they can sell it for Bitcoin as well. So they actually bypass the whole banking system altogether. And I think in my opinion, it's actually a better way of developing the Bitcoin economy, because this develops this parallel non-KYC, fully free and independent Bitcoin economy, which I think Bitcoin was invented for in the first place. And yeah, so you don't really need the permission. You don't like, if you think about KYC ML, it is essentially a permission from someone to use your own money the way you want to use it, right? And if they approve the use that you want and the purpose of your transfers, then okay, you can use it. If they don't approve, and it doesn't have to be terrorist financing or some illegal gambling or anything. It can be absolutely anything. And in a lot of countries, if you say some wrong, if you express some wrong opinions about the government, that can be a reason enough for them to shut down your banking system. So I think definitely, the way of actually earning Bitcoin and building these local Bitcoin economies is the way to go down the road. And we have examples of that in various countries. There are some Caribbean countries that already do that. There are whole villages that have been switching to Bitcoin completely, thanks to some very proactive Bitcoin users out there who hold regular meetups. They have roundtable discussions. They have workshops. They sign up every single merchant on every street to Bitcoin, so that everybody can, create essentially this circular Bitcoin economy in which everybody gets paid in Bitcoin, and then they also pass this Bitcoin to other people as a means of payment. And eventually, I think this leads to a situation in which they ask themselves, well, I mean, it already works pretty well for me. Why do I need the bank at all? Because everybody I know accepts Bitcoin from me. Anywhere I go and I want to buy any groceries or anything I want, they accept Bitcoin from me. Why do I need a bank at all? So this, I think this is exactly how it will play out long term. But I agree with you that in a lot of cases where KYC is involved, there will be issues with getting Bitcoin.
And this leads perhaps to the next stage of the discussion here in my mind, and that's how these economies, both on the local level and now on an internet-wide level, if you're talking about Bitcoin as a native currency, lead to Bitcoin operating as a global reserve currency. Now, there, in my opinion, is the actual economical value that is provided to the individual by these ecosystems, by these individual markets, wherein, again, you, without having a bank, can be able to purchase goods and services and other things that you need without having to necessarily give up your identity or things of that nature. But in my opinion, that is slightly different than the value that Bitcoin can have to the ecosystem as a whole. And I'm not talking about just the payments ecosystem, I'm talking about the world when it comes to being the reserve currency or being the currency, the holder of value within the entire world that everybody else pegs to, right? So while I definitely think that these independent economies are going to help push Bitcoin to that reserve status, at the end of the day, that global reserve status is slightly independent of even those smaller economies and smaller markets. In my opinion, where Bitcoin as the global reserve currency really starts to hit home is, again, in its ability to store wealth and transition wealth over time. Back in the day when Bitcoin was originally created, there were other projects that were currently online, eGold being one of them, that wanted to do the same thing, in the sense create internet cash. But they had issues with being able to replicate those particular digital assets, where Satoshi came in and found a very interesting solution to the Byzantine generals problem, as they call it. So as a result, what ended up happening is Bitcoin came on the scene primarily, and in my opinion also flourished primarily because there was nothing else like it in the modern world, in the sense that sound money truly was no longer available to the people that are involved in this modern economy. Back in the day, the dollar used to be backed by gold. One can say that that's probably the closest that we've had to sound money before the Roman pure, gold coin. So as Bitcoin came into the scene, the reason why it started to grow and proliferate, again, in my opinion, so strongly, is because it took on this form of an asset that holds value through time, and it holds value despite of what other things are currently going on in the modern world with regards to fiat currencies. So this type of ability is really what I think will long-term propel Bitcoin to be able to stand on its own 2 feet. And while there is still going to be the fiat economies, I don't think that they're going to go away. They're just going to morph. They are going to rely on some type of central peg. At first, it's going to be a basket of currencies such as SDR, special drawing rights, but in the future, it very well likely could turn to Bitcoin, because at that time, Bitcoin will be the only thing that still has a reasonable model for issuance, meaning that it can actually be defined, unlike the fiat currencies, where it's actually very difficult to see how much has been created and how much is in circulation due to how the ledger system works and things of that nature. So with all of that being said, I think that it's important for people to recognize that while Bitcoin can definitely become the native currency of the internet, utilizing such protocols, layer 2 technologies as Lightning, it is not necessarily a easy transition from that to Bitcoin as a reserve currency. Those markets need to develop for their own purposes, as you mentioned, both local and as well as across geographies. But Bitcoin, as it continues on as a global reserve asset, that is something that's going to be primarily dependent on how secure we're able to keep Bitcoin. So with that, I want to encourage everyone to look into how you can actually help the network grow and expand. And in my opinion, the best way to do that for an individual is to run their own node, to verify transactions and to keep the network more secure. So with that message, we'll leave you off today. Thank you very much for joining us. My name is Nick, signing off.
And I'm Yuri. Thanks for joining again. Check out moontower.co. See you next time.